we just sent it flying. 50 basis points for your first Fed cut. This is not a good historical precedence. Okay, we need to talk about this. This is the initial reaction of markets, what the dot plot is telling us, and what the Fed report just said. Holy guacamole. Grab yourself a drink, a coffee, whatever you want. We got a lot to get into in a very short amount of time. Keep in mind, I'm posting this video as soon as possible, so we do need the press conference from Jerome Powell. I think he's going to be on the dovish side. He's going to try to baby the markets into this 50 basis point cut. Is kind of preemptive. It doesn't mean recession, blah, blah, blah. But, yeah, not so fast there. Okay. So let's get into the dot plot. This is the summary of economic projections. This is the GDP projection, okay? This is actually the best part about this projection. The Fed kept their estimates at 2% GDP, okay? So the fear was that the Fed might lower their GDP projection for 2025. They did not do that. So inherently, they're not saying we're going for a hard landing. They're saying 2% GDP for 2025? That's good. Now, keep in mind, I'm not even going to look at your 2024 projections because Wall Street doesn't care about those. The only thing they care about is 2025. And perhaps the federal funds rate, projected rate at 4.4% by the end of 2024. That's the only thing that really matters. Basically, the Fed's saying 100 basis points of cuts by the end of this year. That's a 50 basis point cut today, 25 in November, 25 in December. What's also very interesting about this is you did get one dissent on the decision to do 50 basis points today. So one Fed official presumably only wanted to do 25 basis points, and you did get the first dissent in this whole cycle so far. So first up, again, GDP, they kept that at 2%. That's great. The unemployment rate was revised up from 4.2% to 4.4%. So the Fed is expecting additional weakening in the labor market. But that's not as bad as what we could have seen. Anything, as I said, over about 4.5% would be seen as negative, okay? Because at that point, you're like borderline potentially into a recessionary spiral at that point. But still, 4.4%, how good is that? And it's not great, okay? Still, the Fed projecting some weakening in the unemployment rate. Expected inflation on your PCE, last dot plot was 2.3%. The Fed's now expecting 2.1% by the end of 2025. And core PCE was expected at 2.3% on the June projection. Now it's expected at 2.2% by the end of 2025. And get this, the expectation for 2025's federal funds rate is now 3.4%. So that's kind of in line with what the markets have been pricing in. You could say it's kind of in the middle of what the markets are pricing in. Not too many cuts, past what the markets are pricing in, but, not being as slow as maybe what some people have expected also. So when I look at this, not bad, okay? Now, you did get, which is interesting, on the longer run column here, you got the projection that the federal funds rate would have to be a little bit higher over the longer run. So the neutral rate potentially went a little bit higher. The June projection was 2.8%. And now the Fed's projecting 2.9% for the longer run rate. I think this will inevitably make its way to 3%. I think that's where most people believe the longer run neutral rate is at. So I don't think that is much of a problem at this point. And then everything else stayed the same. PCE inflation at 2% long run, unemployment rate at 4.2% longer run, and the GDP at 1.8% longer run. So nothing changed on that longer run column besides the federal funds rate target for the longer term. Now, we need to talk, okay? This is crazy. The last time we got a 50 basis point cut to start the rate cutting cycle was 2007. The last time before that was 2001. Both of these instances were very negative for stocks and overall markets. This 50 basis point cut is seen as, oh crap, there might be too much weakening done in the economy. Now, you come to expect a rally upon the initial FOMC release, and that is what we are experiencing. But this is not good for markets, generally speaking. The historical precedence around 50 basis points is typically not good, and Wall Street will start to say, does the Fed know something that we do not? And when Wall Street's trying to look out, they're going to say, oh crap, maybe the Fed does know something we don't know, and maybe 3-6 months from now, the economy could be in a worse place than, we're expecting. Now, what makes matters even worse for markets is today, yes, following this report, you did hit a brief new all-time high. But this is now, if we close green today, 8 green days in a row for markets. It's going to be hard to see any kind of substantial or material rally higher from here, okay? Just because of how much strength we have seen into this Fed meeting. So I was under the impression either way this thing goes by the end of the day today, you're probably going to see the markets in red territory. You're probably going to see the next couple of days be red. The last time we got a Fed rate cut was August 1st, 2019. That was 25 basis points. And so a smaller cut than what we've seen today, and markets sold off 7% in 4 days. I think you got to be vigilant of that, especially with this larger rate cut. Larger rate cuts like 50 basis points typically are the start of a cutting cycle when the Fed made an oopsie-doopsie mistake. Now, here is what changed in the statement. This is what Wall Street looks at. It's the same statement, essentially. They just add things and change things. And this time, it seems like a lot was changed. It says, recent indicators suggest the economic activity has continued to expand at a solid pace. Job gains have slowed. They added slowed and took out moderated. And the unemployment rate has moved up, but remains low. Inflation has, they took out, eased over the past year, but remains somewhat elevated in recent months. There has been some progress made. They just put, we've made progress towards the committee's 2% inflation objective, but remains somewhat elevated. They actually took out inflation here, which is pretty interesting as well. And then they did add here, the committee has gained greater confidence that inflation is moving sustainably towards 2%. So that's good. They took out here that inflation goals continue to move into better, they just say are roughly in balance now, which is interesting. They say in support, or they said prior, in support of, now they say in light of the recent progress on inflation and the balance of risks, the committee has decided to lower the target range for the federal funds rate instead of what was maintained before. And then here is the actual percentage they drop rates to 4.75%. You can see here is considering additional adjustments to the target range for the federal funds rate. So saying they're going to cut rates even more. They took out this part that basically that they need to find it appropriate to reduce the target range. They took that out. So very, very interesting here. Kind of what we expected. 50 basis points was priced into markets. That's what I have said for days. Again, the thing that we really need to watch for if you're equity investors is do markets sell the news on this? Do markets kind of freak out to some degree of this 50 basis point cut? And it's a good chance that does happen. Normally, again, 50 basis point cuts are not seen as good news, but there is a way Jerome Powell could try to paint this as they're just getting ahead of the curve. There's no recession risk coming, so on and so forth. It's up in the air whether or not the markets will actually buy into that. Now, beyond just the Fed today, we also had some Tesla stock news that I want to share with you. We are getting an update from Tesla's semi-factory in Nevada. The construction is starting to show some real progress, so that's exciting. As well as that, Pepsi announced today they currently have 89 Tesla semis in their fleet. PepsiCo said today that their drivers who operate the company's Tesla semi-trucks have reported that after driving the electric truck, they don't want to go back to driving a diesel truck. Morgan Stanley's Adam Jonas has released a new Tesla note. He says, quote, "Think of this. Is Ford going to potentially fund Tesla's AI data center growth? Ford has disclosed it has accumulated firm commitments to purchase approximately $4 billion of ZEV credits to help maintain fleet compliance on CO2 emissions globally in the years ahead. On our estimates, given Tesla's share of the markets where Ford participates, that's as much as 50% of these credits would be potentially purchased directly from Tesla." Tesla discloses at the end of Q2 2024, it had 2.5 billion of AI infrastructure within its PP&E, up 65% year over year. Adam Jonas goes on to say, quote, "We believe that Tesla's capability in distributed energy generation, storage, and solar and storage, Powerwall, and Megapack products may hold some important cards in the evolution of the US grid as energy usage of compute and data grows." Adam maintains his $310 price target and overweight rating for Tesla stock. In a second note out today from Morgan Stanley's Adam Jonas, he says that Tesla shareholders should understand what's happening at Elon Musk's AGI startup with XAI. The common denominator, training and simulation, deterministic to Tesla's future in robotics, autonomy, and manufacturing. He's basically saying Elon Musk starting XAI is actually a positive for Tesla's AI prospects. Because when XAI learns something, that can be essentially easily transmitted to Tesla. Beginning today, Tesla's supercharger network is now officially open to GM EVs throughout the US and Canada. Over 200,000 General Motors EVs will now be able to charge at over 17,800 Tesla superchargers throughout North America. Unlike Ford, which is offering free adapters to be able to charge on Tesla's supercharger network, GM is charging $225 per adapter, and GM says that usage of non-GM adapter violates warranty. It's also being reported today that Rivian is now selling certified pre-owned vehicles on its website for as low as $62,000. The pre-owned Rivians get a 4-year or 60,000-mile warranty and a 7-year or 175,000-mile warranty for the battery pack and drivetrain. You can also return the car within 7 days after purchase. Neuralink's brain implant chip called Blindsight has received breakthrough device designation from the FDA. This designation is given after preliminary clinical evidence indicates that the drug and device may demonstrate substantial improvements on a clinically significant endpoint over available therapies. Elon Musk actually says the Blindsight device from Neuralink will enable even those who have lost both eyes and their optic nerve to see, provided the visual cortex is intact. It will even enable those who have been blind from birth to see for the first time. To set expectations correctly, the vision will be at first low resolution like Atari graphics, but eventually it has the potential to be better than natural vision and enable you to see infrared, ultraviolet, or even radar wavelengths, like George D. LaForge. Imagine that, if Elon Musk can actually cure blindness. I don't think there's anything to stop FSD and a massive robotaxi network, let alone fully Optimus robots that'll do whatever you want them to do. I think this is more of a waiting game at this point between where Tesla is now and massive wealth creation. With that said, we will go over in the next video what you really need to know about Jerome Powell and the press conference that started at 2:30 p.m. today, and what that's going to mean for markets and for Tesla. Tesla's in a very particular spot here because we have the Robotaxi event on October 10th, and at this point, it's not priced into Tesla. There can be a lot of upside from that event, but what happens in the markets is kind of going to dictate what happens to Tesla. If stocks sell off, well, Tesla's probably not going to do too well. If markets rally and you get a broad-based market rally, interest rate sensitives are going to outperform, and heading into October 10th, Tesla stock will do very well. So we will discuss all of that in the next video, coming out tonight around 8 p.m. Eastern Standard Time. Until then, you guys have a fantastic rest of your day. Happy Jerome Brady Day, and I will see you in the next one.